So I believe anyone that owns a property has either been solicited by cash offers, either by mail, text, or by phone. And most cash offers are really well below what a typical retail buyer would pay. But what many sellers are not aware of is a consumer-friendly full cash offer option. And like most sellers, they really want to hear only just one thing from their agent.
What you gonna do, Derek? Show me the money! Congratulations, you're still my agent.
All right, so let's take a look at what you can expect when you submit your property to our online cash offer dashboard. Now, I've included a link so that you can see your cash offer options for the property. When you click on the link, you'll need to add the property address. Once the property address is added, in about 10 seconds or so, you'll receive these 3 different cash offer options that'll look like this. One, a quick close option, a cash with upside option, and a buy now, sell later option. I should say that in all 3 of these offer options, the offer is a preliminary offer, which can increase or decrease after further investigation of the property and comparable sales. All right, let's first take a look at the quick close option, which I really won't go into too much detail because it is pretty straightforward. The seller chooses the closing date. The buyer will do a home inspection to verify the condition of the property to be able to finalize the offer. And when the sale closes, that'll also be the same day the seller receives their proceeds. The benefit of this offer is that you can pick your close date and of course move whenever you want. This option may be fine for those who are really looking for convenience. Now, one of the cons to this cash offer, as you can see, is that the cash offer is considerably lower than the market value. So although you won't have to make any repairs or do any updates to your home, you will be leaving a fair amount of money on the table. So the next 2 options will be more reflective of a full price cash offer scenario. Let's move on to the cash with upside option. So with this type of option, the offer really does represent the full market value of the property in cash, aligning closely with the real value of the property. So this full market cash offer gives the seller 2 payouts. The first is a guaranteed initial payout, which is usually about 75% of the finalized offer minus any seller loans against the property. So this first payout provided to the seller is really determined by the sales price minus the reserves, the program fee, agent commission, and closing costs. Let's take a look at an example with an offer market value of $1,171,600. In this cash plus offer, it's going to be, again, $1,171,600. The reserve amount is going to be $199,172. The reserve is a portion of the seller's sale proceeds that is temporarily withheld by the buyer to cover potential costs or even market changes. So the reserve amount is usually about 15% of the offer price. So once the second open market sale closes, then the balance of the reserve gets paid out to the seller, which shows up as the projected second payout in this example. So in this case, if the open market sales price ends up being $10,000 higher, then the projected payout will also be $10,000 higher. Conversely, if the open market price is lower, then the second payout will also be proportionally lower. So the other question is, what is this program fee? So the program fee goes towards the buyer and is a 6% in this scenario. Once the buyer closes on the property, the buyer will be responsible for all the property taxes, insurance, HOA, if there is one, utilities, and maintenance until the property is sold in the open market. So some of the program fees that are paid to the buyer also go to covering those costs until the property closes on the second buyer. There is also the agent commission and closing costs that are also factored in. So in this example, the total proceeds to the seller after both payouts would be $1,036,866. So the primary advantage of the cash plus offer versus the cash offer is the seller will net obviously more money with the open market sale, but still giving the seller the flexibility to choose your closing date without the hassle of being on the market. Now, one other variation of the Cash Plus offer is the Cash Plus repair option. So this is identical to the Cash Plus offer, but with this option, the cash buyer will decide with the seller what updates and repairs will be done to refresh the property to help increase the property value after the seller moves out. So in this option, if the first payout was, let's say, going to be $837,694, well, like before, and there's a $20,000 worth of updates and repairs that the buyer and seller have agreed to, then the seller would receive $20,000 less than the initial payout to cover the costs of repairs. Now, the goal is really that the seller will receive higher offers than selling it as is. Now, I've had several cases where a seller has maybe spent $20,000 to refresh the house and netted $50,000 more for the sale of the property. So this option can be a great option for sellers who property is maybe a little bit tired and would like to try and increase the value of the property prior to putting it on the market. So the goal in this case is for the seller to get a larger second payout along with the reserve money. So next is the buy now, sell later cash offer plan. So the cash offer program allows a seller to buy non-contingent before they sell it. It really unlocks a portion of a seller's equity in advance to be able to secure the home of choice while still being able to sell their current house for the best price possible after they buy. Here's a breakdown really of how it works. The company is going to make an offer to buy the seller's home at full market value, and like before, they pay the seller in 2 installments with a flexible closing date. So the first payout is about 75% of the offer price, and the seller's loan is also paid off with the monies received from that first installment. So the benefit is the seller is going to avoid carrying the cost of 2 mortgages in this scenario, while still eliminating the sale contingency of selling their property. So in this cash option, the program fees typically range from about 2 to 2.5% of the property. So the offer typically is valid for about 180 days while you continue to list the home on the open market. Once the seller is under contract on the new home, the seller may opt to get the home on the market soon thereafter. And if the home doesn't sell in 180 days, well, the company will buy the home at the agreed price. So the program benefits are that you work with your real estate agent and mortgage broker of choice. You unlock the equity from your current home for a, again, new down payment for the next home. And you avoid the cost of 2 mortgages. And the seller keeps any upside if they sell for more money on the open market. Of course, the seller moves at their own pace and finds the right buyer on their own terms. Now, of course, I should mention that an open market sale will typically net the seller more money since there are no program fees associated with that type of sale. So the advantage, however, is the options that it gives the seller, which is greater flexibility and convenience when it comes to selling and buying. So I hope you found today's video helpful. If so, give it a thumbs up. Thanks.